Chris Capri, founder of Second Skies. Welcome to another video of Second Skies Forex here. So this is another price action video. What we're doing is we're talking about channels and alternatives to playing channels or flags in the market. We recently had one just yesterday on the pound US dollar, and it kind of gave us a couple opportunities to get into it, and if we played the traditional methods we would have had a larger risk. So this method is designed to reduce risk when playing a channel. Channels form generally they form after large and powerful moves, either at the top or the bottom of trends. We had a very impulsive move yesterday on the pound US dollar, and generally when you have an impulsive move like this, the market wants to consolidate before its next move, and oftentimes that next impulsive leg is in the same direction as the original one. So when a channel forms, you will see a consistency in price, and you'll see it expressed through a trend line, generally through a minimal of 2, ideally 3 touches or more. When we have that, we can draw a trend line there at that point. This does not have to be horizontal. It could be angled up, it can be angled down. The bottom line is that we have a consistency of the trend line with 3 touches. Now, to actually form a channel, we need another side of the price action, in this case a ceiling, to be confirmed with at least 2 touches, and so that would create the channel. We don't quite have this yet, so what we need to do is be on the look and watch out for see how price action develops over time. Our trend line is obviously confirmed here as it touches again, and then bounces right off of it, and again bounces off of it, and again right here this little wick bounces off of it. So we get several confirmed touches. But we don't want to be long necessarily. We believe that the market is going to continue short in a powerful move, so playing long becomes dangerous because now we're playing against the general ebb and flow of the market. So we want to be looking for a consistent channel on the top, and now we have it. And the way to determine really whether you have a good channel or not is to draw a parallel line from the original trend line, and that's what we have. Now we have it via confirmed 2 touches, but we also have it confirmed via 3 touches here. We could get technical and just say these are the only 2 touches. So one of the techniques that I like to do to determine really whether this channel is going to play itself out is to draw a third parallel line. So we create another parallel line, and what I like to do is take this parallel line and put it right in the middle of the channel. Now the reason why I like to do this is because it gives me now a gauge as to where the value tendencies are in the market. What do I mean by that? Well, by isolating this thing into 2 chunks, I get to see where is the market spending more time in this channel. And clearly in this case it's spending more time in the lower half of this channel. What that means is price has a greater tendency to be towards the lower values than the higher values. If something is going to reverse, it generally doesn't spend time, in this case, if it's going to reverse a massive down move, it generally will spend less time at the bottom and more time in the upper regions. So the value isn't found consistently in the bottom, it would be found consistently gaining ground. But we're not seeing that here. What we're seeing is that the market feels very comfortable being more depressed or weighted in price than it will when it tries to lift up. And as it does try and lift up, what we're seeing consistently is that it has a very brief kind of sojourn here, and then it gets rejected very quickly. So when something isn't able to spend much time at a particular price, it means that the value there's competition for value in that price, so much so that it's being scooped up very quickly. And we see this again right here. We reject off the channel line, and look what happens. It doesn't spend that much time here. Again, it spends most of its time down here. So generally when you see this additional middle line here in the channel becomes a clarifier as to where the probabilities are where the probabilities or tendencies of that channel are going to play itself out. And as we can see, when this thing plays on, it's definitely spending more time touching the bottom, further confirming that. And look what happens. We now treat the middle of the channel as a resistance, even though this is technically not a trend line. It became that throughout the entire time. And as you can see, there were just tons of rejections along the way. So this arbitrary line that I drew now all of a sudden becomes a support or resistance in the market, in this case resistance. and it becomes now the rejection saying, hey, the market can't even make it to the other side of the channel. And look what happens. Now we're drifting towards the bottom. The pressure is on for sure. The moving average is now becoming resistance. Everything is just falling on this pair. And eventually, we should be getting a breakout on this thing, and that's what happens. It breaks out convincingly. Now, sometimes the market will break out and then just keep going. Sometimes it'll retest. In this case, we haven't even done the retest yet. Once we broke out of it, that's it. We've been down, depressed in price since then. So this is actually the live price now. But you can see how drawing a channel, once you are able to identify the channel, by drawing a third parallel line right down the middle, can cue you into a couple things. It can cue you into where the tendency in the market is to find value. And it also can oftentimes become a support or resistance during this entire channel price action experience. So that's pretty much it what I wanted to communicate for this video. I also want to mention you have about 3 days left to the end of this month to get the $50 discount on the ProForex course. We just added another system to it, so it's now actually got a new injection. So the course, you get 2 months of free Cloud9 signals, normally $150, so it's $300 in value right there. You get a free private follow-up lesson with me after the course. That's normally a charge of $175. And then on top of it, you get $50 off. So in essence, you're getting the course for free, but then you're getting added value beyond it. It's a no-brainer at this point. You know, there's rule-based systems in there, there's strategies, there's tactics, proprietary systems, all inside this course here to help take your trading to the next level. So if you have any questions about that, feel free to visit us at secondskiesforex.com, or you can email me directly at info@secondskies.com. Remember to hurry now because you only have 3 more days left. After that, I'm not putting any more discounts on it, especially with the introduction of the new system. It just bolsters the value of this course. So other than that, I bid you all adieu. I wish you good hunting. I hope this methodology here helps you with your trading. Until then, good hunting, everyone.